All right, video number 3, here we go. So we have indicators. All right, I was going to talk about it in the other video, but I want to keep them short and sweet. I don't know how much time I have on this because I've done 3 back to back to back. So what we're going to look at are indicators. What indicators do I use? What indicators do I prefer? Well, there's an opinion on this because if you have multiple chart frames that you can pull up at different places, whereas versus in an application like Webull, you can only see one chart at a time. Now, if you have indicators shown on the main chart and then you click the other chart and you have different indicators, maybe they change. I haven't experimented with that yet. Webull supposedly has a website. I haven't been on the website yet. Maybe I need to go do that. But what I will say is my favorite indicators, all right? So favorite indicators. Mark it right pretty well. Favorite indicators. Bollinger Bands. By far my favorite. All right. EMA. What does that mean? Exponential. Can't spell it here. This N right there in between that. Moving average. All right. Bollinger Bands, exponential moving average. What else? RSI. All right, what does that mean? Relative strength index. Okay, so I'm going to keep it simple. I kind of like MACD because it kind of gives you a nice signal, but not all the time is it accurate. Now you can find certain things using MACD. I would suggest going to Investopedia.com, Skyview Trading, Option Alpha. Maybe Option Alpha has indication videos on there. I'm sure they do, but if they don't, then Investopedia.com is a great place to learn. Mostly definitions, technical things that somebody might not be able to explain to you in detail, but in the event that you fully understand, like iron condors and things like that, you have to really know how to build those before you try to use those, if that makes sense. So my favorite indicators, right? Bollinger Bands, exponential moving average, RSI. Why don't I use moving average? Well, you can. You can blend anything you want to what makes it work for you. All right, there's so many indicators: average true range, MACD, RSI, on balance volume, which is actually a pretty good indicator. We'll put that on here. On balance volume, because that kind of gives you an idea of where the volume's picking up at, right? And it's a balanced moving average type of indicator for volume. Hope that didn't break. What is that? Anyway, so in the event that you have, say, now, what if I don't want my chart being all, clouded up or whatever? Well, some charts give you the option to just temporarily remove, like what you can see. It's got a little eye symbol. Mainly TD Ameritrade does that. You can have where you can click it away, bring it back, click it away, bring it back. Or you can just have different charts with different indicators on them, like Fidelity Active Trader Pro. I can have 10 different charts all saved differently, where some have moving averages, some have exponential moving averages, some have Bollinger Bands, some have a mix of the 3 or 4 or 5 indicators, however many I use. RSI is generally just an indication, whatever you want to say, of where the price action is actually at. A very common flaw that I'm seeing with relative strength index, aka RSI, is that for people who watch RSI often, they look at the very base of RSI. You got 70 and you got 30. You know how many times I've seen stocks do this and they're like 110 or 90, all right, or vice versa, 15, 7. I've literally seen that happen, right? So how do you control whether or not this is doing this? Say it's moving normal and up and down, whatever. All right, that's your RSI. So this tells you that, okay, 70 is oversold. 70 is overbought. Don't get that confused. Top is overbought, bottom is oversold. 70 is overbought, which indicates that people may start selling, right? You got 2 scenarios here. For example, if this was what you saw, you would clearly see that this reached about 75, maybe 80, and people said, nope, get out. people shorted it, you know, people sold off for profit, whatever they did. Dang, man, we hit all the way back down here to oversold. All right, so we got oversold, overbought. In the event that this is moving, you know, nice and, you know, say 50 to 40, this is about average. You're not really going to see any huge jumps of volume in there, you know, unless something happens like earnings or something like that, and then you'll shoot up or shoot down or whichever. Everybody always says that, not everybody, but a lot of people I always see and read, whether it's a chat or stock clips or in general, you know, something like that, where, sorry guys, where they're talking about the RSI being oversold or overbought, and saying the event that it hits 70, you know, people are like, oh man, it's overbought, it's overbought, it's overbought, sell, 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 get out. Well, the first one I saw do this was Apple, all right? Apple hit 70, and it kept going. And then this is the first time it hit 230, it wasn't before. And then it went a little further, and it went up to, I think it was 240, all right? So now Apple's oversold in this range at like the 90. So then it came back down a little bit, and it went to like 80s. But guess what? Apple kept going. This is the second time around. Apple is continually pumping. Guess where Apple's at now? $302 a share. So guess what? Everybody who shorted this range got burned because they assumed that it was overbought because of the RSI, which is just, it's an indicator. It's not a promise that it's oversold. We guarantee you it's coming back down. Some stocks, that is very true. What can you do to maybe change this up a little bit? Maybe adapt a little better to give yourself a better update or a warning, more or less, that it is not actually overbought yet. Well, what can you do? What you can do, on some brokerages, I noticed that Webull doesn't let me adjust the mobile app with RSI, but I can adjust time frames on EMAs, MAs. You can adjust the colors, you can draw your own lines, you can do all these things, but you cannot adjust the overbought and oversold numbers on RSI. With Fidelity AgriTrader Pro, I can. Well, what if I want to see 85 and 15? Now I have an extremely good example of a stock moving in its normal range, and then boom, it shoots up. Now it has my attention. Do I need to short this right now? Not yet. I need to wait on confirmation. Now what if it was down here? There's a huge indication that that is oversold and needs to be bought or picked up, or you're going to see volume step in. Now here's the catch. If this is a company that's going bankrupt, or you know, they're just diving down due to terrible earnings, the outlook is trash and everything else, maybe you don't want to buy yet. Maybe you want to wait a little more. Because like I said, I saw a 7 once. That was pretty wild. I actually bought 10 shares of that stock just to see what happened. And I'm glad I only bought 10 because it went further down. And the RSI was irrelevant because the stock pretty much went to nothing. But this again, here we go. We'll use Apple as the example. Apple went up to the 90s. And I think it even hit 100, like 110 range. So what happened with that is it just kept going up and up and up and up. Now, sure, there were little intermittent like drops, you know, on the way up to that. But for the most part, Apple has been constantly above 65 to 75 for the last several weeks for sure, definitely over a month. But once the volume kicks up, that's how you know that it's going to get better, right? So RSI, the takeaway is that we need to focus on just really indication that something is overbought or oversold. We don't need to use strictly the RSI to confirm that, okay, I'm right, it's going to go down. That's not the case. What if you had MACD? We're not going to go a lot into MACD. Moving average, convergence, divergence is what MACD means. Generally, you know, you're going to have this kind of thing happening, but when they come together, that's an indication that they're going to be doing well. So this is a nice cross. If this was happening and you had your RSI, right? So RSI, hopefully y'all can see me. RSI is at 20, and your MACD's crossing. Your volume candles are starting to pick up. All right. MACD's hitting that cross and you're oversold, not guaranteed, but it could be a very good buying point. Real quick, disclaimer, obviously, these videos are not for you to go and trade based on what I say or do what I say to expect X amount of returns or whatever. Past price does not represent future possibility. It is only indicative. Again, that's price action, that's price history, that's everything. Ooh, throat's dry, man. Hopefully these videos are helping somebody. I'm not shooting for views, I'm not shooting for popularity, I'm not shooting for any of this crap. What I want is to teach people, like my Instagram says, that the stock market is not a big scary monster and anyone can indeed trade the market. With focus, psychology on your side, aka discipline, greed, fear, those kind of things. Back on top, here we go. That was RSI, a little bit about MACD, Bollinger Bands. We'll get to those last actually. Moving average and exponential moving average. What is the difference? All right, you got EMA. I love these markers. And EMA. What's the difference here? Can anybody tell me? Just kidding. EMA, what's up, man? Nice, I love it. Oh, thank you. My son brought me a bunch of markers just in case. Thanks, man. That's all good. I love you. Thank you. Careful, you got it. You can leave it open if you want. All right, back to it. Sorry, guys. EMA versus MA. What is the difference? Which one do you prefer? Honestly, I prefer the exponential moving average. Why? Because I don't really trade extremely long-term, years, but I do look at longer-term charts, which this comes in handy. But this also comes in handy on long-term charts. How long? And I mean like years on top of years. So like a monthly chart is going to show years, So every candle is a month. So you're easily going to fit 12 candles in there in a chart, and it's going to spread out a few years. EMA does the same thing. So here's the difference. Both of them are what? Lagging indicators. All right? Lagging. But if they're both lagging, why would we use them? Well, because exponential is faster reacting, all right? And if you want to learn more about that, go to investopedia.com, look up exponential moving average, it'll explain it to you. I'm going to try to keep it simple in the video so we don't confuse anyone or get too far off topic, whatever. EMA, lagging, faster indicator. MA, moving average, lagging, slow. We'll just say slow. Keep it simple. So these numbers, when people use these, which indicators are they using as far as time frame goes? What distance or what candle are they using? If you're looking at a monthly, as we said, each candle is going to represent one whole month of price action. A yearly, every candle is a year. That's when you're going to get very bland. It's going to be very difficult to see any kind of patterns unless you're looking at like the S&P 500 for the last 50 years. What time frames? Well, you got some different time frames. The most common, not necessarily all together, but if you put all these together, it's going to be very confusing. 8, 9, 13, 21, 30, 50. Not many people use anything in between that. 100 and 200. These are your most common EMA lines or MA lines, moving average or exponential moving average. Why in the blue hell would anybody have this many indicators on their chart? Well, I did that as an experiment. So you can watch this one come to this one. Now it bounced off of the 13, but now it came down to the 21. Now it bounced off to 21. Now it came down to the 30. So you're going to continually be confused here at what you're actually looking at, right? Because no chart's going to move that way. It's going to move like, and the problem is if it breaks below the EMA you're using, now you're thinking it doesn't need to go all the way to the 30 before it comes back up. But what if it goes to like in between the 30 and 50? Does that mean it's going to go all the way to the 50? No, because I proved myself wrong in this on a few occasions, like Roku, for example, when it went from 170 all the way to freaking like $90, all right, or 98 or whatever it was. And that was because I had so many moving averages that it messed up my technical analysis as a whole, right? Because now I'm watching for it to go, okay, it broke this, and this is on a daily chart. It broke this, it broke this, it broke this, it broke this. So it stopped here around the 200, like just right at it. And that was 170 Roku. That's where it hit, 176, I think it was. All the way, I want to say it was like 90, I think it was 98. All right, so we went below 100 bucks. Buyers instantly got in there. I hope you love the sound effects. Boom, launched it right off that 200 EMA like it was nothing, because now they're getting over a $70 discount on each share. And that's the way you got to start thinking about this stuff, because if Tesla drops back to $320 for any reason over the next year, I guarantee you buyers are going to roll in that guy and push that price right back up, because they know it's been to 500, oh, not 500, 490, so damn near 500 at this point, 498, $2 within, that's $500. And you hit that point. So they know that it's been to 170. So now it's playing in this range here. It's already been back up in that range once. But 145 right now, if you didn't know, if you're watching it, this is, what day, I don't even know what day it is, January something, 2020. Roku's like resistance is hard at 145, right? And it keeps getting pushed right back down to like 134, you know, give or take 137, whatever. So that's something for you guys to keep in mind if you're trading options or stocks against it. I don't know that we're going to see this area again anytime soon. It could definitely happen. It really just depends on what Amazon, Amazon, Netflix, and Disney Plus are going to do. So instead of, I guess I could have left that there. So instead of just erasing, I'm going to show you what I think works the best, but two different charts. All right. We're going to have, on one chart, we will have EMAs, right? 8, 24, or 30, whichever one you prefer. EMAs. This is one chart. You want to know what the last one is? 200. You know what chart this worked the best on for me so far? 5-minute chart. Not 5 months, 5 minute. Don't confuse nobody. 8, 24, 200. Because here's what's going to happen. When the 8 falls below the 24, that's going to signify that it's going to keep pulling down, not necessarily to the 200, but on a 5-minute chart, these indicators can be very, very close together. On a longer term chart, the 8 and the 24, or the 830 or 8 and 13, whatever you're choosing, can be like, they can roll each other the whole time, but you'll never really see a pattern change until it breaks below those candles. So, good God, I need to get a cough drop. One thing I realized is that the 8 and 13, when I was using those the most, was on the long external, on the long chart for SP, long term. Every time the 8 crossed over the 13 down, it fell. That was during the collapse of 2000, of 2009, and so it actually hit like, I think it was like February, somewhere in there, 2009. It actually went down in 2009 of September. Good God. This is my favorite term, short term. This is fairly recently that I started using it in this fashion. Now, what are we going to change if we go to a longer term chart? Daily chart. It's okay to use these two. A daily chart, though, I want to see this. All right. I want to see the 50, the 100, and the 200. This is a daily chart. Sorry, I hurt somebody. 8, 50, 100, 200. Now, why do we have all these on a daily chart? Well, it's not necessary, right? You can actually do like a 8, and then a 50, and then a 200, you know, to kind of keep it a little more balanced, but it spreads it out more so you see where the 50-day moving average is. So this is, these are each days. 8 days, 50 days, 100 days, 200 days, right? Same thing here. 5 minute, that's 8 5-minute candles, 24 5-minute candles, 200 5-minute candles, and that's going to be that average price built into it, right? So once you start using these, you're going to understand a little more about price action, support and resistance, and things like that. So a lot of times, EMAs and moving averages can be used as support and resistance in some cases. Now the 8 more or less is riding it out. The 200 is definitely a support area and things like that. So that covers EMA and moving averages, RSI, on-balance volume. On-balance volume, like I said, is sort of an average of volume. But as you see the on-balance volume indicator going up, you can actually assume that volume is indeed picking up to what the price needs to be. So what we're going to look at next is the Bollinger Bands. All right, BB for short, otherwise Bollinger Bands. If you need to, there is actually whole books written specifically on the Bollinger Bands. Mr. Bollinger that came up with this idea and put it out into the markets. Very smart guy. So what he realized is that we'll use this line. We'll keep it simple. We'll use this line, and we'll use this line. So we have the upper band, the middle band, and of course the lower band. Why do we have 3 bands? Well, what we have is deviations, right? This is your constant average, right? This is the constant average of where the stock price should be, generally speaking, for the longer term. So you can ultimately say if the stock is strong and healthy, like a real company like Disney, Microsoft, Apple, things like that. If you look back, if you could see the Bollinger Bands on a long term, you would see that they pretty much stay right here, right? They don't normally go out to this range or this range because they're very safe stocks. Not many people sell them off because they're looking for long-term growth. I highly doubt Disney's going to go out of business anytime soon. So what we'll do is we'll look at the upper, the middle, and the lower. Now here's the catch. Bollinger Bands are generally set to a 2 negative or a 2 positive deviation. And of course your center is 0. So what does that mean? So we got 1 and 1, so we got 0, 1, 2, 0, 1, 2, except we're going negative here. Negative obviously means down, positive obviously means up. So we got +1, +2. So what happens here? Well, you can constantly see where a stock will go, you can constantly see where a stock will actually reach, you know, say, let me do this. Let's use a short example. You can see if the stock reaches up to this 2, all right? If it goes up to the 2 and comes back down, that's an indication that it rejected going outside of its normal range beyond this point. So you're +1 and +2. So +2 generally is going to be a reversal area. Same thing with the -2. You're going to, if you push down here far enough, and then come back up, that's going to be another rejection because it needs to return to its average range. It needs to return to its average range. Now, sometimes, as you see, it can go all the way, or it can kind of stay floating, occasionally tap 2, maybe 1, and it stays in this nice, beautiful floating range. Well, here's another thing that can happen, but you won't expect it unless you're reading the Bollinger Bands constantly or you see them constantly. All right. And what's that fish hook? What's it going to be? Well, what are we changing here? What I do and how I was able to project not only Tesla's price going, I didn't say fucking I know the future or whatever, excuse my language. What I did say is that I used the Bollinger Bands to determine where my expected price was going, and I was already fairly bullish on it. Now, had I been even remotely bearish, I would have expected this. But what you want to see on the bands for indication are up and down, and again, with earnings, with war, with news, with trade deals, any kind of stuff like that can just really screw this whole thing up. But ideally, the direction Bollinger Bands are going is going to follow sequence. When this band turns up, this band will turn up. Where do you think this one goes? Up? No. Down. When you see this, that is almost, I will say probability. It is about a 60 to 80% probability that the price is going to move this direction. A lot of times it's already going to be here. So what do you do differently? Well, let's reverse this. All right. So now we got this. Nothing really changed with the middle. You got both the middle and the bottom turning out, and you got this one casually going up. So what's going to happen is eventually it's going to do this when the price drops back down, because the band is going to bounce, right? So what do I do differently? What makes the Bollinger Bands my favorite tool or indicator to use if I'm actually really trying to look at a move going? And you could possibly blend it with moving averages, but if you put too much stuff on a chart, you will get confused. I didn't realize this, like I said, later until like probably about 4 or 5 months ago. I realized that too many indicators, no matter how accurate you thought they were because how they move, like it was almost like I was trying to build a Fibonacci sequence out of moving averages, which is obviously not going to happen. So what happened is I figured out that where do Bollinger Bands go, or when do they stay in certain situations? Well, I changed the settings on the Bollinger Bands. Now, like I told you, RSI you couldn't really change, not on Webull, but I could change it on other platforms. But RSI to me is a strength index of how far it's going to push in one direction. If you're overbought at 85 or 90 RSI, it might just keep pushing. Why would it stop? If there's that much pushing motion and volume behind it, if the volume matches the RSI, it's going to keep going up, baby. And that's exactly what Apple's doing right now. All these brand new highs for all these stocks is crazy. So you need to watch out. Do not overexpose yourself to positions where you're going to lose your account if something changes drastically, right? Keep it, Kevin always teaches in Trader Circle like 2%. I've heard 5% from other people. And option alpha is like 1%. If you're risking or losing more than 1% of your account, then you're just wasting money. Anyway, so what do I change? I don't go as far as 4, but I go as far as 3. Why? Why do I go as far as 3? Because so far, with my experience using the Bollinger Bands, when I changed this to these settings about 2 months ago, yeah, it's fairly recently, I realized that it actually indeed follows better than the other way. And why is that? Not 100% sure, but the way you can look at this whole Bollinger Band situation is a good analogy I heard was a dog on a leash, right? So the dog on a leash, we'll say a runner, all right? I know a lot of you animal lovers don't like dogs on runners. My husky was never on a runner, not here. He was always free to run around, just saying that. So say you got a dog on a runner, right? This little doggy, all right, let's see. I'll give y'all some art, hold on. So my little doggy, all right. Looks like a pig, don't it? Whatever. Anyway, little doggy, all right. Here's my dog. Little fluffy tail, whatever. OCD over here. All right, my little dog, right? He's on his runner, right? He can only go here and here. That's his average range, right? That's his potential. But he has a 30-foot difference on each side, right? So he can go a max of 30 feet up or down. Why would he ever go 30 feet away from where he normally goes? His house is here, he's got a little dog house, he's got his food, all right? And let's say his bone, he buries his bone over here, right? That's not a bone. I can't draw anymore. I'm getting old. Just kidding. All right, got his bone over here. This is the 20-foot range, right? And this is, let's say he's got his favorite tree he pees on right here. This is, we'll say 15 feet, all right? So once this dog runs on his range, he's going to 20. There's your -2 deviation, right? All right, deviation is the deviation of up and down, right? So 15 is going to be, you're about +1.5, all right? You don't normally see halves. You normally just see it by single digits. So that's his range. So he goes here, he goes here, no big deal. What happens when he sees a rabbit? And the rabbit is sitting right here, right? Little rabbit, big old ears. All right, little rabbit, all right? Boom, he runs. And he's pushing, trying to get this rabbit. He wants the rabbit. The rabbit's over here now. He's trying to pull and pull and pull and pull and pull. But he's only got 30 feet, so he's now stretching this here, all right, I hope this analogy helps somebody. So he's trying to get the rabbit, all right? Eventually, the rabbit got away, all right? The rabbit is no more. He disappeared. He ran off back to his little family somewhere in the field, all right? So now, what's the dog going to do? What do you think the dog is going to do? The dog is going to go back to his average range. Because you know why? Because he has to live here. He's going to get his pea tree. He's going to eat and sleep in his house. And occasionally he'll go get his bone. But until a rabbit comes back, either way, you know, obviously it can be down. Maybe there's a rabbit down here. All right. Looks like a mouse. So now he's going to go -3 deviation out, but eventually he will come back. But this is where those big moves happen. All right. How do you catch those moves? Well, you watch. If the Bollinger Bands are pushing hard against the +3 or the -3, all right, and they're already way past the tube, you're not going to see the tube because it's technically the middle of these. And you can change settings on the Bollinger Bands on like Active Trader Pro. I'm sure with TD Ameritrade, Thinkorswim, you can do the same. But I can actually like highlight the background of the Bollinger Bands, and I can bold the lines different colors, you know, so I can have the top band, I can have the whole Bollinger Bands yellow, and then I can shade the back like really dark, or I can like have it really faded lightly, and that's going to be my signification of my Bollinger Bands, you know, doing their job. So for Tesla, where were the bands at? All right, the bands were literally what you see here. Bands were up here. The bars were going, and they were sitting right here, pushing. Not only did I go to a short-term chart and look at this on a daily, I also looked at this on a monthly, a weekly, and a yearly chart, right? So what I did was I projected lines. I used dashed lines to project where the price is going to lead based on the Bollinger Bands. And what happened was I came to the conclusion of $440. And what I did was I estimated that at minimum, this top band was showing me 450. At minimum, we're going to see 425. That is a calculation I did in my head. There's not really any formula for that, but I was absolutely correct. The Bollinger Bands were absolutely correct, and that enabled me to create this spread of Bollinger Bands, and actually, not spread, but this calculated Bollinger Band play. And what happened? Well, Tesla at the time, you know, it went from, I think it was like 360, it dove all the way down. It gapped down actually to like 325, and this is when I bought it. It was $77. I was like, at minimum, I'll make 20, 30, 40% on my play, and I absolutely did. I sold it at 140 something dollars, so easily 100%, right? 100% gain right there. Now, for every trader, that's a wonderful thing. You guys know how much this call is worth now? $7,000 is how much this $77 call for 425 was. Am I still holding it? No, I sold it at 100%. Am I happy that I sold it at 100%? Yes. Why? Because I doubled my money. But did I know Tesla was going to go just crazy off the wall and run all the way to 425 and then 450 and then 490? Absolutely not. This option was $4,800 yesterday.